Welcome to the District Talk podcast. I'm your host, Chad McLaughlin with District Home Loans. And this week, our guest is John Tobery.
Hey, I'm back. It's been a while.
Realtor.
Yeah,
John
how you guys
Tobery.
doing?
Yeah, thanks for coming back to the podcast. Excited to have you.
Absolutely. Anytime.
Yeah, I would love having you on because you have so many great opinions on the current state of the market and just in general, like the real estate world. And that's just...
Well, I appreciate you saying that, and I think that's how I try to be with everybody, whether it's, you and I, obviously, we're friends, and I'd hang out with you anytime, whether it be on a podcast or somewhere else. But I try to have my clients be like that, too, is while we may not be, quote, friends because we just met or whatever, I want you to know right out of the gate you're getting an honest opinion out of me.
Right.
You're getting the truth as I know it.
Right. And I think that leads us really, I mean, not to like jump right into what I want to talk about this week, but that leads us to what I want to talk about this week.
Nice.
Which is managing expectations, right? So like you are, you're very upfront with folks.
Yeah, I try to be. Honestly, I've gotten a couple testimonials recently where people have spoken about they appreciate my patience.
Okay.
And that's one way they can say it, and I don't necessarily see it as patience, although that's probably true.
Yeah.
Is I see it as I'm taking the time to educate them about what the reality is. Right. And that's hugely important. That might be the most important part of my job. Your job, too.
Oh, absolutely.
Right?
Yeah.
Because they are coming in with their ideas, whatever they saw on the news, whatever they read on whatever. Mm-hmm. Hopefully not any stupid TikToks. But those kind of things, that's what they know. So it's our job to bring reality of today to them.
Right.
So
one of those things then that I wanted to talk about as far as managing expectations is, we're in a hot market right now.
But
we are. I mean, and granted, I think it depends on where you are, right? Yeah. We're fortunate we're in the DMV. So
sure.
we're in DC, Maryland, Virginia market. Also, to that extent, Pennsylvania, West Virginia.
Sure.
But as far as the market goes right now, this DC metro area is still limited inventory. There are buyers out there that still want to buy.
Yeah.
I just saw recently that the millennials right now are dominating the market.
100%.
Yeah.
And the flip side of that is there is a thing that's called the silver tsunami.
Yeah.
That isn't happening.
It's not happening, right? Because because they're complacent, right?
Well, I can't really blame them, right? If you're sitting on a 2 and 3% interest rate, but your house is too big, are you going to downsize and pay more?
Right.
No. Right? So financially, the quote boomers,
you're almost going to have to be forced out of there, like steps, right? I mean, something's going to have to something health wise is going to have to happen.
Yep.
Where you're forced out of that house.
Yep.
To sell it.
Yeah, 100%. Because there's no good financial reason.
Right.
Because most of the time the downsizing is partially because you're going to lower your payment. Hopefully, those kind of things, get into a better house for your situation now, and it's just not happening yet because of the interest rates. And again, it's going to take years for the COVID years to play out.
It's going to
I don't know what that is. I'm not going to pretend.
I mean,
to
talk
know
about
what
managing
that is.
Expectations. Yeah. Rates are probably not going to be dropping, realistically.
Well, we're not. Let's just cover the basic fact that I am going to be 47 in October. And I will be surprised if I ever see a 2 or 3% interest rate in my life.
It's going to take another pandemic.
Right. It's going to take something crazy that we don't know is coming.
Something like a war.
Yeah.
A pandemic. Something
global
that's going
issue.
to. Yeah.
Global issue, right?
Yeah.
And so, I mean, honestly, fingers crossed that doesn't happen.
Right.
Right. I would rather pay more in interest than have to deal with COVID or some sort of World War III situation.
Yeah.
You know what I mean? So I think we just have to, be realistic about interest rates. Hopefully they're going to come down. Nobody here is going to sit here and even give you an expectation, and expectations are harder to come by these days because nothing anyone predicted at the beginning of the year. And you and I did the 5, 5, and 5 thing, several months ago.
We did, yeah.
Some of that's going to be right, as in a 5% increase in home values.
That's already happened.
Yeah,
that's already happened. I think the last time I saw the increase in sale price year over year was we are at like a 6.9, I think, something like that. Like it's we're already into the sixes.
Yeah. Yeah. So it's happening. So the idea that waiting, and it depends on your market. So if you're watching this in, I don't know, Texas or Phoenix or wherever, Florida, I don't know what those markets are doing. I've heard things. Some of them are crashing. Some of them are on a downward trend, whatever. And some of them are holding steady, whatever. But we don't live in those markets. We live here.
Right.
Right. And I've said it on this podcast before. I'll say it again. But until you get rid of the massive federal government footprint, the military footprint, the data centers and technology footprint that is here, our jobs aren't going anywhere.
Right. DMV is always going to be
as long as that's going to be the case, this market is going to be more resistant towards home issues, home pricing issues.
Depreciation and
it isn't going to happen here in the same way when you hear national news.
Right.
So if that's what you're banking on, don't, because you're just missing the boat. I still have a person that I've talked to for 4 years now, I want to say, and he's still telling me about the market crash that's coming.
Oh, no.
And all I keep saying is, well, home prices went up.
Right.
Whatever.
Yeah.
Right.
And he missed those interest rates.
Yeah, and he missed the interest rates based on waiting for that market crash. Yeah. So all that's happened is the houses have gone up 20 and 30% at least.
Yeah.
Probably more, and he still hasn't bought.
Yeah.
Right? So you can be that guy and you can stay on the sideline forever, but at some point you got to get off the bench and shoot your shot. Yeah. Right? And I don't know when that is, and maybe you have to decide what's right for you. Again, I will stand by my comment of the right time to buy is when it's the right time for you.
Yeah.
Right? But if you're going to keep waiting in the DMV as a whole, the price is going up.
Yeah.
Right? So it doesn't matter what the interest rate is. And again, you can change your interest rate. You can never change what you bought the house for.
Yeah. So that's right. That's
you
very
have to
true.
keep those things in mind.
So tell me then a little bit about how you, with the way that the market is right now, making a strong offer in this market, because that's really what it's going to come down to, right?
Yeah.
I mean, you have to have a strong offer to win.
You're right. Right. If you want to buy the house, I can think of another person that I've talked to several times that will point out a house to me, and just making up numbers here, but let's say it was $500,000, and he'll tell me, well, I don't think it's worth more than $460,000. Great. You can think whatever you would like to. The market is what tells us what the answer is.
Right.
Right. So we're in a situation. It definitely depends on your price range. Where are you at? Are you a first time home buyer? Are you whatever? But generally, let's say if you're looking in the 300 to 800-ish number,
it's like a sweet spot.
It's moving.
Yeah.
Right.
Yeah.
So to that question, making a strong offer, there's different things that can go into it, but it's not all about money.
Okay.
Right. I think sometimes we get caught up in the idea that the strong offer is, okay, the house is listed at $400,000. I'm going to offer $460,000. Okay, that might win it, that might not. And I'm not necessarily saying you have to offer 60,000 over, so don't
Right.
write that in sand or write that in stone. I'm sorry, but it certainly does involve the overall number you're offering. But there's other things that go into an offer that can lean in a seller's direction that
Okay.
they appreciate.
Okay, like what?
One of them are there's usually contingencies in any offer,
Okay.
right?
Yeah.
So waiving contingencies or not including them in the offer is one of the things you can do. It seems very much like we have kind of gotten back into the COVID market of if you want a home inspection, I can take that offer, I can stick it in that candle right there, light it on fire, and throw it in the trash can because that's how much chance it had of being accepted.
Really?
Yeah.
We're back to a point where even home inspections are on the table.
Right,
Or off the table, I should say.
Yeah, off the table, right?
Yeah.
Because the home inspection is another opportunity for the seller to lose money,
Yeah.
right? And there may or may not be anything wrong with the home. It's the major things, right, that we have to be wary of. Every home has an issue.
Mm-hmm.
There is no perfect home out there. It doesn't exist. That's just not a reality. So if you're looking for that, you're already in a good luck situation.
Yeah.
Right? But we want to avoid foundation issues or, if we get into a more rural home, septic and well issues are kind of the majors. And I think you can still get away with septic and well in certain situations, right? But in the DMV as a whole, we are pretty much on public services.
Okay.
Right. If you, particularly as a DC Metro,
Yeah.
let's call it that, right? So you don't have to really worry about septic and well. Then we're into home inspection. Don't get me wrong. In a perfect world, I would never advise a client to not do a home inspection, gain that knowledge, if nothing else.
Sure.
Right? Even if it's not about getting money back from the seller, just know what you're getting into.
Yeah. Well, the whole thing too, and what I've found by doing these podcasts and interviewing other home inspectors is that home inspections are not a pass fail, right?
Nope.
It's basically just to make you aware of the potential issues of a home.
Right.
And whether or not, they're going to be costly or not.
Right.
To a certain extent, you
Right.
know. So maybe even would you recommend then doing like a walk and talk, like what they call a walk and talk, where you kind of go in on the first visit.
I mean, walk and talks are terrific, right?
Yeah.
But you still, when I'll use the condos between 300,000 and 500,000 right now as an example point, right? Moving very quick. If it's a good one, it's on the market for 3 days and it's gone.
Yeah.
Multiple offers, 5, 10, 15, somewhere in that range. It's getting all that scheduled. Can you get that done?
Oh, right.
Right.
So basically, you're like, "Hey, home inspector, I'm going to see this house tomorrow at 2 p.m.
Right. I need you.
Can you somehow you got to figure out,
Right.
if it's a home inspector that you trust,
Right.
and if they have the availability to do it.
You're right. And sometimes I can make that happen. Don't get me wrong. Like, I'm not going to say that's an impossible,
Yeah.
but it's also not the easiest, right?
Yeah.
Because a lot of times with both my schedule and yours as the
Right.
buyer,
Right.
we're already trying to
So now you're already
figure it
coordinating
out.
not 2 schedules but 3
Yeah,
schedules.
now you have a third person you're trying to get involved.
Right.
So
Okay.
so that can be
But
difficult,
it's an option.
but it is an option.
Sure.
There's also things you can do with condos or anywhere that has an association, whether that be a homeowners or a condo association. You have a right of rescission period where you have to receive the condo docs. So if the listing agent's doing their job, they already have them, and you get them as soon as the contract's ratified, right? So you can do things like you're going to do.
Well, Maryland has a
inspection
minimum,
after
right?
that. Yeah, they all have a minimum.
So if you can get are you saying then if you can get your if you can get your home inspection done within the time frame.
In that time frame, right? Yeah. But it's not really a home inspection.
It's the
right?
HOA.
It's not a contingency.
It's the HOA the HOA or condo that you'd be canceling the contract based off of.
It's quote. I will call the association rescind period the get out of jail free card. Right. So if you can somehow manage to get in the door and do that inspection, right? But you have to have gotten approval in some way. So the listing agent should know the game that's being played.
Yeah.
Right?
Yeah.
But you're trying to use condo docs to do
and the house has to be open.
Right.
So the house has to be open to the home inspector.
Right. So you have to have that permission out of the gate. So even in the ratified contract, like Virginia has a very specific way that's done, right? And may or may not be accepted, right? So there's that game. Don't count on that, I guess is what I'm trying to say, right? Because each one of the jurisdictions, DC, Maryland, or Virginia, there's a set amount of time, right? Roughly 3 days, right? It's a little different for each one, but whatever. Just call it 3 days.
Okay.
You'd have to be able to do that and rescind your offer based on the association documents,
not the home inspection.
But it's really about the home inspection, right? Okay. So they have to give you permission to do that because, again, they should know what game you're playing.
Yeah.
Right? This isn't, I didn't invent the wheel here.
Right.
You know what I mean? So that's one way to try to get around it. The walk and talk's another way if you can get the inspector to come out when you're actually viewing the home. But even that, that takes an hour. Right.
Yeah. And even the walk and talk is not a thorough inspection.
No.
It's basically just like.
I hate to say it. By no means am I as knowledgeable as a home inspector. I'm not going to pretend that, but I come from a construction background. I don't know that you're getting any more than what I'm seeing while we're there. Right. So if I'm there 15 minutes, I see what I see. If I'm there an hour, I might see a little bit more.
Okay.
Right.
Yeah. Yeah.
And that's an advantage for me. I'll toot my own
realtor,
horn
as
now,
a realtor,
right?
absolutely, yeah, you should.
So that's a reason.
Your background is
to use me as a agent because I do have more knowledge than the average agent out there, right? I just did this over this past weekend. I showed everything was virtual tour for this particular client. They're in the process of coming to DC area, right? Mm-hmm. So this one, the wife has been able to attend some of the showings in person, and this past weekend I did a lot of virtual stuff for them, and I showed them the things I was seeing, and then after the fact I explained what the hidden costs were of what I talked about seeing during the inspection, right? Because there was some rot on the fascia and blah, blah, blah. Okay, well, the hidden costs are to replace the fascia meant you took down all the gutters and downspouts, and now you have to replace all the gutters and downspouts, right? So there was a hidden cost there of replacing those fascia boards. How expensive is that in itself? Okay, but now you have this other thing because that's what the gutters are attached to.
Yeah.
Right?
So waiving particular contingencies then, such as the home inspections. Any other contingencies that?
Well, yeah, we should get into that. So the three basic contingencies in a average sale are home inspection, which we've covered, financing, and appraisal.
Okay.
Right. So Chad can talk about financing, and I would say to me, as an agent and also a consumer, right?
Yeah.
Bought my own houses in life, right? Before I was a real estate agent. Financing's the one I'd be most likely to feel completely comfortable waiving because you generally know out of the gate.
Yeah.
Financing's okay.
Yeah.
As long as I don't do anything stupid between now and then. And when I say doing anything stupid is you don't buy a car, you don't buy furniture, anything that you're financing.
Right.
You do not do until
You don't quit your job.
We're sitting at the settlement table, right? Yeah.
Or plan on or starting another job for that matter.
Right. Yeah. Well, we just had one of those. But we knew that out of the gate.
We did.
But but either way, so financing, that one, not the most scary to me, and you can do things to help yourself with financing out of the gate. Maybe let's go ahead and cover those ideas. That there's a difference between pre-approval and pre-qualification.
There is. There's totally a difference. So pre-qualification just means we're just looking at basic information about a prospect, right? About a client. We're looking at their income, we're looking at their credit, and essentially their assets, right? But we're not really digging into them, whereas with a pre-approval we do. So pre-approval means, okay, I've seen your bank statements, I've seen your pay stubs, right? I've done the due diligence, and I feel comfortable saying that yes, we can get you
X amount of money.
Exactly.
Right, whatever it is for you.
And not only that, but we can get you settled in a certain time frame.
Right. So that's a big one. So what he just said there is that that's a super key point. So I want to emphasize that. If I had a bell, I'd ding it right now. Right. Yeah. Is one of the other ways to make a strong offer in this market is to be able to close faster.
Sure.
Right.
Yeah.
So absolutely. The norm is roughly 30 days. Right.
Yeah. Give or take. Yeah.
So outside of that, if you can close in 2 weeks, even with financing, now you're kind of competing with a cash offer.
Yeah.
Because it's hard to close much faster than that, no matter what the situation, because title and other things need to occur, right? So if you can get yourself into that position.
As far as closing in a 2 to 3 week time frame, it's definitely doable. Right. I mean, because at that point, we have all your documentation. So that's the biggest thing. We need documentation up front. So, and that's part of the pre-approval.
So I'm going to interrupt him, and I feel bad. Actually, I don't, because it's chat. But what he's saying there is that, and we both run into this problem on different sides of the street, is I understand that in some cases you were just meeting me or just meeting him, and we were just some dudes, right? Yeah. Who technically have some certifications and some licenses or whatever you want to call it, right? But being as upfront and honest with us out of the gate only helps you.
Oh, for sure.
Right?
Yes.
It's not keeping secrets from your agent or your lender because you're whatever feeling it is you're having, right? Honestly, just doesn't help you as an individual.
Yeah, I mean, you need to feel comfortable with the lender and with the agent right off the bat, right? Sure. So, and if you're not comfortable with them, then you need to find an agent and lender that you are comfortable with,
right?
Because we're going to be digging. We're going to be digging into like your last several years of.
But we also both owe you fiduciary responsibility, right? So anything we know about you or learn in the process, I'm not sharing, right? I mean, maybe with him, with a particular client, because it's something that helps, right? But that's still between us, two professionals that I know he's not going to share it. Yeah. I'm not going on social media and talking about you as a person or just random people, right?
Right.
I'm talking to him because it's helping move something forward.
Right.
Right?
Right.
But at the end of the day, we're not sharing your information with people. We need to know it to help you make the best step forward.
Right.
Right.
Right. Yeah. Yeah. So, and again, knowing all of your information up front, providing all the documentation up front, such a huge help. And again, it'll only get you to the finish line faster.
Right.
And make you more of an ideal purchaser for somebody's home.
Right. We're trying to make you look the best to that person over there that's selling the condo, the townhouse, the single family, whatever it is, right? That's the whole point, is to try to put it in a hot market particularly. You need to put your best foot forward first.
Yeah.
We're not in
And you need to be ready.
Right.
You need to be ready too.
Right.
That's, I mean, like if you're making an offer, you need to be ready to settle in 2 to 3 weeks.
Boom. Right.
You know.
Yeah, this is not a slow moving, train coming out of the station.
Right.
You're getting shot out of a cannon.
Yeah. So considering that being said, if you're thinking about buying, like, let's say in the fall, now's the time to start, because now's the time we need to start getting all those paperwork.
Yeah.
We need to start getting all that together. We need to start talking to, John, your realtor, about what neighborhoods you like, what school districts you like, where can I, like what's close to that's within the commuting distance, right? So because that is all information that we're going to need to kind of hit the ground running when it comes time to actually put in an offer.
Yeah, the more I have to learn in the first parts of our process, the slower off we are to really get on the ground and running.
Right. So, I mean, right now is actually, I mean, just in general, we're in the middle of summer right now.
Yeah.
But if you're thinking about a fall purchase, then it's probably time to start getting started.
Yeah. Start at least reaching out and starting a little bits of the process.
Okay. So we talked about making a strong offer as far as making sure that we're pre-qualified. We talked about waiving contingencies. And then this other piece here, the earnest money deposit. So let's talk about the earnest money deposit in general, because I think a lot of folks just don't know what an earnest money deposit is.
Yeah, so sorry, I looked at my watch. It's too much technology around me sometimes. But so an earnest money deposit out of the gate is basically, the way I like to describe it, is putting some skin in the game.
Yeah.
Right? So anybody can write on paper, I'll give you $1 million for 123 Main Street and I'll close on August 1st. Right? I can do that. Hey, Chad, let's go buy a $70 million property now, right? Because we could just put that on paper. The real point is, one, you need that pre-approval letter or proof of funds, right? But the other thing is that the seller wants to see that you're willing to put some money on the line, right? So when I say skin in the game, that's what I mean, money on the line, right? So because of contingencies and things that can go wrong during the process, an EMD or earnest money deposit is generally, in our area, 1% to 2% of the purchase price or offer amount, if you want to look at it from that standpoint, because you're doing it during the offer process. So, $400,000, $4,000, right? Okay. So that's strong. Yeah. Okay, you put your 1% down. That looks good on paper. But now I'm competing against 5 offers, 10 offers, 15 offers. Well, if I put 10,000 down, which is, 2.25%,
all of a sudden you look a little better. Yeah.
Right? Because
you feel more confident in what you're doing.
Right, because that seller knows that this person was willing to put 10 grand on the line, not 4.
Yeah.
Right? So it might bump you ahead of another offer that maybe is $2,000 more than yours. Yeah. Maybe you offered $415 and they offered $417, but you put 10 grand down. I would advise my client to take the 10 grand down person.
So what happens? We should be transparent. What happens though if they don't follow through?
All right. So this is the at risk skin in the game, right? So if you fail to perform as a buyer, right? That'd be the right way to say it.
Yep.
The seller could keep all that money.
Yeah.
Right? So that's why you have skin in the game. That's why they're looking at you as a stronger person, that you're willing to put more money down. Because let's say you get, we had all the contingencies. We had an appraisal. We had financing. We had a home inspection. All those things come back. It appraised. You can get the loan. Home inspection was basically pretty good. Couple small issues here or there, whatever. We're through all those things. That should be in the first, let's say, 2 weeks of a 30-day process. You've had those contingencies. They've been completed. And on day 25, you get cold feet and decide you don't want to buy it. You can't handle that, whatever, $3,000 a month home payment or whatever it is.
Right.
Or, oh my gosh, I decided I'm going to move to Tahiti.
Yeah.
Right?
Change your mind.
The seller now has the opportunity to, and most likely will, keep whatever your earnest money deposit was. Right? And the reason for that is one, you have now stopped them from marketing their property for 2 to 3 weeks. And for it to get under contract again, now it's a little tainted because it's been on the market a while, particularly in a hot market. And 2, they are now another conceivably 30 days away from getting to the settlement table and getting that big check that comes at settlement to the seller. They've been delayed.
Yeah.
One way or another, they've been delayed.
And that kind of goes to the point of the EMD, or the earnest money deposit, also being called the good faith deposit.
Yeah.
Right? Because you're going to work in good faith to purchase the home, and then you're going to go to the finish line.
Right. I mean, because every contract talks about that and talks about time is of the essence.
Right.
Right?
Yes.
And those two things are both about both parties, buyer and seller, and representatives of both, whether that be the lender, the agents, everybody involved, needs to be snap, snap, snap. You need to be doing your stuff.
Yeah.
Right? Whatever it is. And for the buyer, that's providing information in a lot of cases. Sure. Right? But, for the agents, that's making sure that we're getting documents turned in on time, quickly, and you might have 3 days to do something. There's no reason to wait 3 days. If you can get it done in a day, you should have it done in a day.
Yeah.
Right? I find that's one of the things that we are often doing is quote, pushing the client. And I don't mean it. That's why I put it in quotes. Right? I don't like to use air quotes, but I did in that case because it's not something I want to do. I don't want to make you uncomfortable. I don't want to push you to do anything. It's your prerogative, right, of what you're doing. But at the same time, once we're ratified, we've committed to living up to certain time frames and established dates. So, you're doing those things. And again, with the earnest money deposit, going above and beyond what is the expectation of 1 to 2% is just another way to influence the seller, right? So when an agent says that to you, I'm not trying to get you committed to more money. It's not a benefit to me.
Sure.
Right? Like, I guess that's something I really would like people to understand out there. I didn't even kind of think about that when we were talking about this earlier. It's not helping Chad. It's not helping me. It's not helping the listing agent.
No.
It's not helping the seller in real terms, other than they just know you are more committed, right? There's a difference between that's my girlfriend and that's my fiance.
Yeah. Yeah.
Right?
Well, and the earnest money deposit too, it goes towards your closing costs. It goes towards your down payment. So it's not like you're putting this on top of all your other expenses.
I'm glad you said that, because that is the other part of the earnest money deposit, and we often have to explain.
We do, yeah.
Is that it gets used towards your closing costs.
Yeah.
As long as you do what you're supposed to do to get to the table.
One of the biggest questions I get is, what's the earnest money deposit, and do I have to pay? Is this on top of, is this down payment on top of my earnest money deposit?
Right. It is not.
It's not. No.
It's just part of it.
Right. It goes towards your expenses. It's just basically just
people
commitment.
ask. It's hard to explain that. That's why I say it goes towards your closing costs.
Yeah.
It's just if you put 5,000 EMD down and you were going to need 20,000 at the table, you now only need $15,000 at the table.
Yeah.
Right. To make
Right.
it as simple and easy as we can make it.
Exactly.
Right. So it gets counted towards. It's
Right.
not on top of anything.
Right. Well, I think that's kind of covers a lot of our topics as far as like making strong offers on a home, managing expectations for a hot market.
Yeah, and there's other things. I think
there's certainly other
we
things.
covered the basics.
Yes.
Right. Every individual home sale is different. So I'll kind of use this opportunity as a way to explain this is why you need an agent and you can't do it yourself, right? I'm not trying to pretend I'm special, right, or anything like that. Just the idea of I know, or another agent knows, this is how you work the system.
Yeah.
Right.
Well, and that goes back to what we talked about last time you were here, which to our folks listening, go back and check that out as far as why you need a buyer's agent.
Yeah.
Right. And why a buyer's agent is important because, again, that's a whole other podcast.
Yeah, oh my God!
We already did.
We good, and could go on for hours.
And we could keep talking about like why you need a buyer's agent.
I mean, there's so much that goes into that conversation.
But your buyer's agent will know the ins and outs of the market that you're purchasing in. They'll know how to structure an offer to make it a strong offer. With just a couple of the things that we talked about today, of course. But there may be other things that your particular market may want or require.
Right. And something I'm sure we covered in that, I'm not going to pretend I remember everything we said in that thing, but at the end of the day, the market is ever changing.
Yeah.
Right. So while mom and dad or aunt and uncle or older brother or whoever it is that you may be friends with or associated with who wants to offer you advice, they absolutely mean the best.
Yeah.
Love them for that. Oh my God, you can never replace family and friends and how they want to look after you. But the market changes. So just because what they did in 2015 or in 2022 or whatever is not what is happening today.
Yeah.
Right?
Yeah.
The market has changed throughout 2024.
Yeah. The market's changed just since last November.
Sure.
I mean, November was a high. That was a peak for us,
right?
As far as the market goes, as far as interest rates, and the volatility of the market, where everything was in November was doom and gloom.
Yeah. Oh my God.
And then fortunately, this year has been better than what we expected it to be. But yeah, it was. I mean, just in a matter of 6 months.
Yeah.
The market has changed.
Yeah, and there are some things coming down the pipeline that I think we're going to address in a podcast sometime in the next month or so when we maybe have a little more information for you. But there's things coming in the second half of this year that going to change the whole conversation. And I honestly, no one, including myself, but anyone else does not know enough right now to really even give you guidance on. Right?
It's tough. It's tough right now.
I have about 50% of the story.
Yes.
Right? And as we get a little further down the line, I'll have a little bit more of the story. But it's going to be, the market is going to change in a way that everyone is going to have to adapt on the fly. And it's going to make, in my opinion, the realtors and lenders even more important, because we are going to be the ones, we are and I hesitate to make this analogy. We are not soldiers, but we are on the front lines in this conversation, right? So we are going to be the first ones understanding what's happening and how to make it work.
Yeah.
Right. And that's something that, like I said, it's coming, and we're going to have to adjust, and offers are going to be different.
That's the one thing I've learned in this. That's the one thing I've learned in this career in 18, 19 years is that you have to be adaptable. And if you are not adaptable, this career is not for you, because if you can't change with
my brother-in-law and I have had this conversation. He is a dude who likes to know the thing. This is it. These are my parameters. This is my
like an
box.
engineer.
This is my schedule. This is my Don't get in these careers if that's who you are. Don't do that, because it's not for you.
Not at all. But that's also what makes it exciting, though, too, I think. For us.
I enjoy it. We enjoy it, right? But but there are people. You're just not cut out.
You just can't.
That my life's going to change on a moment's notice.
If you would have told me 5 years ago I'd be making videos on Instagram and TikTok or whatever, I would have been like, no, I'm not. No, but here I am.
yeah, damn straight. I can't even believe it.
So, and doing a podcast for that matter. So, but here,
I mean, I thought I might be sitting somewhere having a conversation with him about something like this, but not with microphones and cameras. And there's a big wind or light thing up here, and none of this. None of this. None of this at all.
Well, John, I really appreciate you coming by today and chatting with me. I really do. I love having you here, and we'll have you back in probably about a month when we can start talking about the other things that are the changes that are coming, because there's a lot of changes coming. And again, we have to be ready. We have to be adaptable, and we have to be, So, and to our folks listening, I really appreciate you taking the time to listen to our podcast, and we'll see you in the next episode.
Awesome, guys. See y'all later.